Our sector is riddled with challenges around finances, and we've had many conversations, not only at this conference, but in previous conferences pertaining to that. Building a financially inclusive society is key. How do we do that, though, is an enviable question that we're going to be asking the Chief Data and Analytics Officer at FNB South Africa. Please welcome on stage Zara Feldman.
Good morning, everybody. It's really such a privilege to be here this morning. I must say, when I landed in Cape Town yesterday afternoon in the rainy, gloomy weather, I thought, oh, this is a bit miserable. I'm glad the sun came out for us today. And it really is a privilege to be here. Thank you for your time. I'm going to spend 2 minutes just on what is a Chief Data Analytics Officer and who is Zara, because you probably are all thinking I'm lost, and I'm probably meant to be somewhere else in CTICC 1, but I am meant to be here. And hopefully by the end of this session, you'll all know why I'm here. And if not, I suggest you tell Selvin to not ask me again, because obviously I did a very bad job. And thank you again. So I work at FNB, and I'm responsible for the area that builds credit scoring models for the group. So we service retail businesses, commercial businesses, vehicle financing, as well as our broader Africa counterparts. We're a centralized area. I think credit scoring is a topic, and we'll get into it in my presentation. There's a loose understanding of it generally because most of us in our adult life have had a need for credit, and I think there is a general understanding of there's some model and there's some data, and that gets used to decide if I can buy my dream home or my vehicle when I need it. We'll get into the detail and the nitty-gritty of what we do and how we do it. And really, a Chief Data Analytics Officer is just someone who is responsible for the data, the technology, the system, as well as the analytics and the modeling around a topic, and my topic happens to be credit scoring. So it's a very impressive sounding title, but really, we just look at sort of the end-to-end cycle of a given topic as it relates to data and analytics. So hopefully that at least gives you guys a little bit of clarity. Okay, let's jump right into the topic then. I'm just going to check that my clicker is behaving. Let's see. Yeah. Oh, there we go. Fabulous. Okay, so as the MC so rightly said, financial inclusion is a big topic. It's a massive topic for us in South Africa, although obviously even globally it's a huge topic. I don't profess to have all the answers. I wish I did. But I do think that our partnership as FNB and PURCO, it's a first step in the process to building a financially inclusive society, and that's what we wanted to talk about today. So as a start, what does the context look like? What does the backdrop look like? The unbanked and the never banked population, it's sort of the part of the market where, as a bank, we don't see them. They don't participate in the traditional banking sense. They don't have a need for our products, and they don't look for what we offer. In South Africa, McKinsey says that about 55 to 60% of the populace can be classified as unbanked or not having a need for traditional financial services. That is obviously a very broad statement. When we look at the credit active population, which is really anyone who's eligible for credit between the ages of 18 and 60, that number is closer to 40%. That's a really large number. That's a number that we should all be concerned about, because if customers don't have access to traditional credit in the time of need, then there's alternative solutions for financing which are much more expensive, less favorable, and ultimately don't necessarily lead to wealth creation and generation that is sustainable. So you can access funds in a short-term way. There is access to liquidity in the informal market, but the reality is that it doesn't always lead to generational wealth because of the cost associated as well as some of the risks. So I think we all are all understanding of this problem, but it is something that, like I say, I wish I had all the answers to, but we have a role to play in solving it. So what does this credit invisible market look like? How is it made up? So we like to think about it in 4 quadrants, which you can see on the right of your screen. The first would be what we call new entrants. So people who have just come of age, 18, 19, 20, 21. Largely it's dominated by either youth, students, or graduates. So it's the new entrants into the market who previously were not part of what we would call the credit active population. Then we have the cash economy. So these are individuals who dominantly or predominantly operate in cash. They solve their transactional and their lending needs using cash, and we don't have sight or visibility of them. And there's also obviously a lot to say about these customers. They often have alternative funding mechanisms like access to stokvels or sort of micro lenders, etc. But that's what we refer to as the cash economy. Then you would have customers under rehabilitation. So these are customers who have had access to credit in the past and for whatever reason have not repaid, have gone into what we call a default state. So they've missed repayments and now they are classified as untouchables, I guess, in some sense. So access to credit for an individual like this, whether through a formal market or an informal market, is almost always denied because of that payment history or that black mark. And the rehabilitation piece there becomes very important. So after what period of time do we consider a customer rehabilitated? Will we talk about that, okay? But obviously not the topic or the focus of today. And then the last pocket is really the customers who are, and obviously these pockets can overlap. These aren't mutually exclusive, but we think about them as the unemployed or the informally employed. So where there isn't consistent or stable income, to recognize, which makes access to funding sometimes difficult. Okay, so that's just to give you an overview. We're not going to spend time on all of these today, otherwise you guys will all shout at me and say we didn't sign up for a banking conference or a banking seminar. Thank you very much. So obviously we're here to talk about that orange block, which are the new entrants, your students, your graduates, and what does the journey for them look like, either in their final years of study, when they're trying to ready themselves for the work environment. Obviously, they may also have funding needs while they are studying, which of course is a very big topic. And then sort of post-graduation, there's a need for funding to sort of start your life and sort of enter the workplace. Then I think that a really interesting statistic on the left-hand side is when we look globally at new entrants into the credit market, and we say, what's the first product that they take up? What's the first product that we see engagement with? If you look at some of the other countries, and not all of these are developed, so Colombia and India are both good examples of what we would call developing markets, you see that the predominance is either a credit card product or a loan. Okay, so what we would call a traditional banking product. In South Africa, that's not the case. The predominant product, 60% of entrants who do take a credit product are taking a clothing loan, store credit, an Edgar's account, a Trueworths account. I think we all understand that. And it's something that has been drilled into many of us from a young age. Is the first thing you do is you get that store account or you get that telecom account so that you can build up a bit of a history, so that when you need that finance for your car, there's something there. So this isn't a total shock to all of us. But as a bank, when we reflect, we say we want to be there for these students and these graduates in their time of need. We don't want them to have to go elsewhere before they feel they can come to us. So for us, it's a problem. And also, obviously, it doesn't solve the bigger problem for that graduate. You can't finance a car using a store account. You certainly can't pay your rent, etc. So there are obviously wider financial needs that a clothing loan or a store account or even a telco account doesn't solve. So that's the context in South Africa largely. I think what's interesting also is to paint a picture of what data do we have when that graduate or student comes knocking and says, I have a need for credit, or I have a need for access to credit. And the reality is we have very little information. So on the student, you can see he's a very grayed out little Lego man, and we don't know much about him. He's never banked before, largely, so we don't have any banking behavior. From a bureau perspective, there's no credit relationship with a provider that we can rely on. From spending and saving, there's often very limited information. Perhaps your parents have saved on your behalf, etc., but it won't be in your name, or if it is, it has very limited implications at this stage. So really what we rely on there is alternative data, which we sometimes can source for a student. So things like how you shop at retailers or how often you recharge your airtime, those sorts of things. And enrollment data. So if we know that you're enrolled with an institution and you've gone there for the last 2 to 3 years and you're up to date and all of that, that can add a tremendous amount of value in that student phase. As we move into the graduate phase, we're starting to know a little bit more about this customer because we have the sources I just touched on. And we also know your level of qualification. Your highest level of qualification is that you're a graduate. And then in the last phase, you're employed. You have a bank account because to be employed, you must have somewhere to pay a salary, so by default. And then all of a sudden, there's a little bit more of the picture that's coming into focus. We've got some banking behavior. We can start to track spending and savings patterns. Obviously, if you bank with us, possibly there's a bit of bureau history that you're starting to build up with a store account or with a provider, etc. So once we have that sort of full color picture, now we can with confidence, sort of make decisions around you as a customer. But to be honest with you, we know that that's very late in the life of a graduate because their needs often occur either towards the end of their studies, during their studies if they have a financing need, or sort of leading up to looking for formal employment. So the reality is there's obviously a need for us to meet that need earlier on and not wait. So if we think about how things have been operating in the industry, it's largely been sort of to wait until we have the orange man, but it's too late for the student. I think what many of the banks have done well, so I've chosen our FNB sort of product suite here, but if you go on to many of the other banks, you'll see similar, maybe less good, but similar offerings out there. You'll see that there are great offerings around students that have been put together, or graduates. So we think about preferential rates on credit cards, vehicle financing. We know a vehicle is a huge enabler for a student moving into the employment stage. Then at some point there'll be a requirement for financing a house or a flat, somewhere to live. These are all topics that have been thought about and solved for from a product design point of view. There's also savings offerings as well as, sort of insurance offerings. So I guess the point is when we step back and we think, do we have the right product set for these customers? We largely think yes. The question is always, how do we get these products to these graduates and students at the right time in their cycle, in their journey? Like I mentioned in the previous slide, especially on the credit side, we've often waited until they are employed, until we see the funds, until we can sort of verify some more information about that customer to then offer the credit card, the vehicle financing, etc., which is too late for a student in many instances. If they don't have, parental support or bridging financing to get them from completing studies to being in a job. So that's obviously something that we think about and reflect about a lot. The reality is, though, what do we know? Or what is knowing that that the individual has a qualification, what does it tell us? So this is really interesting. So obviously I think because of this audience, you guys might say they are superior, they are excellent, you should be approving 100% of them. Obviously as a bank, we have to make sure that we are doing the right thing. But when we do know that a customer has some level of qualification or degree, we see that these customers are actually much better from a credit risk point of view, meaning customers that go into default, customers that struggle to repay us. Just that nugget of information where we say, okay, we know that this customer has a bachelor's degree. Those are far better, better performing customers for us. Now we know this, but we need to know when the customer is asking for credit that they are qualified or that they have a degree from a verified institution, because of course there's an element of fraud that we have to deal with. So if we ask you, do you have a degree, or what's your highest level of education, and you tell us, and we just believe you, now we're not employing you, so obviously there's a slightly different context to sort of the detailed checks that an employer would, or prospective employer would go through, but there's a level of fraudulent risk that we obviously have to also deal with. I think what's also interesting is if you look at this Stats SA survey, which is a little bit out of date, it's from 2019, but it does show you that unemployment rates reduce, logically, by age bands for customers who have, sort of higher levels of education. Again, not a surprising statistic, but it explains why, even without knowing your bureau history, even without having a banking relationship, etc., just the nugget of information around having a degree or having a diploma or having a matric is very, very powerful for us. I'm just going to spend a few minutes on what is credit scoring, because like I said, I know it's this sort of like big ominous topic, and it is something that we are familiar with but maybe not that familiar with, and you're probably thinking, how does this all tie together? So a credit score, you can see on the left hand side, I think that's actually, yeah, your left hand side. This is like an example of our internal credit score that we surface to customer. And you can see the types of metrics that will be baked into a credit score. So credit score is just a statistical model that calculates a score based on a number of different data inputs. The more data we have on you, the richer the score, meaning the more qualities we can understand about a customer. But these are the types of qualities we might look at. Things like proven track record, so have you ever missed payments, etc., been behind, run into tough times? How long have you been with a bank? Have you ever gone behind on payments? Have you used lots of your credit limits where you do have? What's your trend over time? Are you taking up lots of debt to finance your lifestyle? Missed debit orders, so do some of your payments bounce because you didn't budget correctly? So you can see here, these are really focused on one, credit performance bureau, what we would call bureau behavior, and two, banking behavior. So if you think again about your graduates or your students, we're going to have nothing. These are all going to look grey, right? So that's I guess where the focus for us comes in, to say, if we don't have sufficient rich data inputs at point of application, the answer is going to be, unfortunately, we can't lend to you because we actually just don't understand you as a customer. So like I said, a credit score, there's an automated application that comes in. We'll go out in an automated fashion, source multiple different data points around the customer. We'll calculate a score, and then that gets used to determine if this is an approve or a decline. So will we give the vehicle financing to the customer? Is it within what we would call risk appetite? Okay, so very technical, very boring. But I do think it's important to understand that without data inputs, the output is really not really worth much. And we aren't really able to therefore see these customers. Because remember, we don't work in a place where we look at everything on an individualized, well, it is individualized, but it's systematic. So meaning we need to source the data systematically. In real time, I think we give back an answer. It's milliseconds, not seconds. That's how fast the systems are built. Meaning that's how quickly we need the right answer to make sure that we make the right decision. Okay, so I think I've told my story so far. It's very, very powerful, as you would know, for us to be able to know in a verified manner that a student, one, sort of is at a verified institution, and two, sort of what's their highest level of qualification, whether it's matric, a diploma, a BCH, or beyond that, master's, honors, etc. By being able to receive that in an automated fashion, it enhances our models, and our models are therefore able to classify between one of the other credit invisible customers walking in, who perhaps form part of one of those other 4 quadrants that I touched on earlier, versus wow, this is a cherry-picked graduate. This is a customer that actually we really want. We know there's value here. We know there's value for them. We have all these beautiful marketed products that we really want to match and pair and give to this customer. But the challenge is how, if we don't know that this customer has a verified degree or is in their final year of study, etc. So I guess the point is we do this today with PURCO. We have a great partnership together with PURCO, and we source information in real time from PURCO about our customers. We get consent to do so, so the customer must give us permission to come to PURCO and source qualifications information, and we use it in our models. And I think what I also wanted to reflect on today was how's that playing out, right? So how is that actually benefiting the individuals applying with us? So when you have a look at it, it's actually quite staggering. So we've been doing this now at scale for about 2.5 years. And you'll see here, so these results sort of look over that full period. The customers where we are able to source information from PURCO and verify that there is a qualification on this customer's profile, they are 1.8 times more likely to be approved for their first credit line on application without having to do anything different themselves. Obviously providing us with permission to come to PURCO, but beyond that, no change in how they apply. Secondly, we see a 32% reduction in the credit score, meaning that we are able to give them a better offering, a better interest rate, better pricing, a more appropriate limit size or financing on their vehicle. The overall basket that we can pass back to the customer is more aligned with the risk profile of the customer. Like I mentioned, we can apply lower risk-based pricing, which is really important because graduates in their first jobs, they still have limited funds and limited finances, and budgeting is of course very important. And we want to make sure that we are not charging them an interest rate which is actually related to a much higher risk profile customer. Again, knowing that there's a qualification on that profile enhances our ability to give an appropriate offering back to that customer. And obviously also enable the debt repayment behavior, that history building up, which also is very critical. And then I think the other piece, which is obviously key, is that we've seen 2.3 times lower default rates on this population. So where the customers are approved, they're taking up, that's over 200%. That's like a mammoth difference. So we are seeing a massive difference in these customers, which again, it's quite a logical thing. It doesn't surprise, but the reality is we were never able to differentiate early on enough in these individuals' journeys prior to our collaboration with PURCO. So it's been a really powerful thing. And hopefully, we've obviously changed some lives by being able to answer that need for credit and that need for access at the right point in time. The challenge for us just remains around coverage. So we work constantly with the PURCO team, but I think it is valuable that we share these statistics here as well. So we don't get 100% coverage of customers who tell us they have a qualification. Now, we don't expect 100% coverage because, like I mentioned, there is an element of fraud or possible fraudulent behavior, meaning customers may declare something that isn't valid, which is why the check is so critical for us. But if you look just at the match rates in the darkest orange bar, that's the match rate that we get when we send a call to PURCO for customers who declared that their highest level of study is a bachelor's plus. So they told us, I definitely have a bachelor's degree. They may have said master's, honors, etc. And you can see that by the different age groups of customers, we're getting somewhere between sort of a 25 to a 50% match rate, which ideally, we would like firstly for that highest match rate to be concentrated in the lower group, because that's actually the people that we're most focused on, the guys leaving university this year. And secondly, obviously, we would like that match rate to be a lot higher, because really what this story tells you is that ultimately we can only solve for 26% of the graduates from your institutions. This lovely story I just told you about how improved our offering is, how we're able to sort of meet the customer and sort of solve for what they're looking for in the right moment of their life. We're only doing that for 26% of the clients. So it remains an ongoing challenge for us. I think, we obviously understand that there's ongoing efforts to onboard new institutions and to bring new players into the PURCO rails. And I think what we were also hoping for a bit of discussion around today is this topic. So if there are concerns or if there are, sort of questions you have around how we do it and how we ask for consent and sort of all the big topics around this, Papaya has a big role to play. So asking for consent is how we protect our customers in terms of Papaya and making sure that we do the right thing all the time. But I don't take it for granted that that's something you would assume we do. So very happy to be asked all these types of questions because really what we are looking for is to improve this coverage piece and obviously to be able to look at customers more holistically in the early on into their credit journeys. I think the other piece which we haven't spent too much time on in this presentation because today we don't get it, but would be enrollment data. So I've touched on qualification data, which is confirmation of the conclusion. When we look at topics like student loans or financing of education, etc., and even financing while in study, enrollment data and stability of enrollment, so the fact that Zara enrolled and she's done year 1, 2, 3 without failing, those are critical data inputs for us and insights. And again, submission of that data and sharing of that data has tremendous value to add. And yes, I think that is really my story. Hopefully I haven't gone too far over time. I hope we'll have some time for debate and discussions. And if you're too shy to ask now, but you are looking for a bit of further discussion and unpacking, understanding of what we're doing, please reach out to PURCO. We'll facilitate. We are, like I say, this is not a first-rand problem. This is a South African societal problem. We have a role to play. We believe the institutions also have a role to play, given the understanding of how we use this data and why it actually adds tremendous value to your students' lives as they progress and as they sort of move into the more traditional sort of roles of life. And we look forward to partnering further on this topic. Thank you so much.
A round of applause for Zara Feldman, please. In fact, Zara, you were so efficient with your time that we have a few minutes for any questions that you might have for Zara. On PURCO, I should note that Bruce Banda from UKZN, I think is the Director of Student Academic, whatever the third word is. Sorry, Bruce, I forgot it. But he'll be talking to the benefits of PURCO and the centralization of it, I suppose, and how it can benefit your student. And I think that's what I'm hearing, that the more data you have access to, obviously with all the requisite permissions and legislative framework conditions met, the better you can be at solving for the 74% age 21 upwards that you're not solving for at the moment.
Absolutely. And like I say, I mean, we celebrate the fact that we are solving for a portion of the base. previously it wasn't the case. We weren't solving for anyone. We were waiting until there was a track record at employer, at the bank, etc. But the reality is that there's a lot more work for us to do, but we can't do it without data. To give you guys some idea, we process anywhere between 1.1 and 1.4 million applications on a monthly basis. So the volumes are massive. Obviously, not all of those are from graduates. That's across the board. But the point is, we can't possibly deal with these things on a case-by-case or look at a manual document basis. And so that's where the challenge for us lies. So yes, solving for greater coverage is crucial for us.
Let me ask this question. Are you providing the universities with indicators of what data you need? Does that make sense? So are you telling them, actually, if you give this to us, we'll be in a better position to process those applications a lot more efficiently with possibly more, yes, we'd love to do business with you answers?
It's a great question. So I think that's where PURCO and the PURCO guys obviously play, a conduit for us. Look, I think at this point, the data we do receive is excellent. From what I understand, there are certain universities that don't submit or don't share. That's where our, I would say, gray areas remain, rather than lack of data or sort of messy data, that sort of thing.
No, for sure. Without placing anyone on the spotlight, if your institution does not submit data to PURCO. Can we have an understanding of why you don't? Anyone would like to venture? You don't have to mention your name or where you're from. We're not out here to out you, but just a sense of these are the concerns we have with it. These are the logistical hurdles we need to overcome, or whatever it may be. No? Okay, I did try.
Thank you. No, look, I think there's a...
No, for sure. Can we have a microphone for Salvan, please? Just a reminder that Bruce Banda from UKZN will be in breakaway room number 3 after lunch to really explore the benefits of being with PURCO.
Thank you very much, Zara. I think you really express the use of qualification data and enrollment data very clear, very, very clearly. In a form where it's so understandable to our delegates. I'm not quite sure whether many of us are really aware of the depth of the value that PURCO brings to the student and alumni community. I think it's very, very important that as much as we want to take the initiative to empower our graduates and students through learning and knowledge and qualifications, the purpose of PURCO is to extend our welfare benefit in addition to the academic benefit for our graduates to extend into a prosperous life. So from an economic point of view, as well as from an academic point of view, it is very important that we create this platform to promote the economic welfare of the institutions. And by the way, PURCO was developed by 4 universities. And, it's really commendable that our universities have been so visionary in making sure that the value of the contribution towards the academic qualification extends beyond the universities. There are only 2 companies in the world that contribute academic data to credit profiling. It's the National Clearinghouse in America, and I can tell you, with my last discussions with they call them the vice presidents, they have about 99% of the coverage of academic data in America, which supports credit profiling. We are around, our coverage currently is about 71%. So we still have a long way to go. It's really a pity that the leadership in some of our institutions find it as being an inconvenience to engage PURCO on trying to promote the interest of their students. It is really unfortunate. PURCO has been in existence from 2008, and this conversation just goes around in circles to the non-participating institutions. The value proposition is very clear. You see it, it's not coming from PURCO, it's coming from the banks who are actually using the data, the application of the data in promoting the prosperity of the students and the alumni. And many of us in this room, I must say, have children in higher education. And it's all our aim to actually promote our children, their well-being, and their prosperity into the future. And this is the way that we can really promote this through participating in PURCO. The big sort of obstacles that we find in our engagement with the non-participating universities, one is POPI, It's very clear. I think they need a clearer understanding of the legislation, because POPI is not an obstacle to sharing data. It's really a framework to manage data in a responsible manner. And this is what Zara is trying to explain to us. And the other thing is, I think there are some old guards in the institutions that need to be progressive, need to latch onto this, need to create the change. And this is where we see this decision-making is being stifled within the leadership of our universities. It's just an unfortunate thing. I think from sharing this with you, you would understand the passion that we have to actually supporting our students, because this is the mandate of PURCO and PURCO, to create a platform, to engage and collaborate, to bring that value, that third stream income to the student. And that is the mandate, to serve the student through whichever channels that's available to us, to actually bring that additional income, given the constraints, through the economic situation, through the funding models from the government. So I just wanted to just put the context around what PURCO and PURCO is trying to do. Thank you.
So, Salvan, thank you very much indeed. It's a third punt for it. Bruce Banda is going to be at breakaway room number 3 after lunch, if you perhaps want to engage more and see how the university can derive benefit from PURCO. We've seen it from the bank's point of view. Salvan has made a case for it from a PURCO point of view. Now let's see how your learners and your institution can benefit from it. Final round of applause, please, for Zara Feldman from FNB South Africa.